Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 10th, 2025, and we're diving into Delta Airlines' latest earnings report for the June quarter. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Delta's report is quite comprehensive, and I'm excited to break it down for our viewers.
Revenue and profitability overview. Let's start with the top line. Delta reported an operating revenue of $15.5 billion for the June quarter. How does this compare to their previous performance, and what does it say about their profitability?
Delta's operating revenue increased by 1% compared to the same quarter last year, reaching a record $15.5 billion. This was driven by a diverse range of high-margin revenue streams. Their adjusted earnings per share came in at $2.01, slightly above the forecasted $2.01, indicating strong profitability. The operating margin was 13.2%, reflecting efficient cost management and robust demand across their network.
Strategic initiatives and revenue streams. Delta has been focusing on diversifying its revenue streams. Can you elaborate on how these strategic initiatives have contributed to their financial performance?
Absolutely. Delta's premium revenue grew by 5%, outpacing the main cabin, while loyalty revenue increased by 8%, driven by co-brand spend growth and card acquisitions. American Express remuneration was up 10% year-over-year, reaching $2 billion. Internationally, revenue grew by 2%, with strong performance in the Trans-Pacific and transatlantic markets, showcasing Delta's strategic focus on high-margin segments.
Cost management and financial health. Cost management is crucial for airlines. How has Delta managed its costs, and what does this mean for their financial health?
Delta's non-fuel unit cost growth was 2.7%, in line with expectations. They reported an adjusted fuel expense of $2.5 billion, down 11% year-over-year, thanks to a decrease in fuel prices. The company generated $733 million in free cash flow and reduced its adjusted net debt by $1.7 billion, reflecting strong cash generation and a focus on debt reduction.
Future outlook and guidance. Looking ahead, what guidance has Delta provided for the upcoming quarters and the full year?
Delta has restored its full-year guidance, expecting earnings per share between $5.25 and $6.25 and free cash flow of $3 to $4 billion. They also announced a 25% increase in their dividend payment starting in the September quarter. For the September quarter, they anticipate an operating margin of 9% to 11%, with EPS ranging from $1.25 to $1.75, indicating confidence in their strategic execution and market conditions.
Key takeaways. In summary, Delta Airlines has delivered a strong performance in the June quarter, with record revenue and robust profitability. Their strategic initiatives and cost management have positioned them well for future growth. Thank you, John, for your insights.
Thank you for having me. Delta's focus on high-margin revenue streams and efficient operations is commendable, and it will be interesting to see how they navigate the rest of the year.
Thank you for watching Smart Stock Watch. If you found this analysis helpful, please like, share, and subscribe to our channel. We'd love to hear your thoughts on Delta's performance in the comments below. Until next time.